Alrighty guys, welcome to a new video. I know a lot of people have been asking me to do trade recaps or trade breakdowns, and I thought today I'll do exactly that. So if you're new to the channel, welcome. My name's Ruben. I've been trading roughly for about 2.5 years and mainly ICT concepts, market structure, inversion, fair value gaps, liquidity, and ICT macros. With that being said, let's hop straight into this trade breakdown. Let's go. Now, firstly, we have to start on a higher time frame. I don't always just start on the 1 minute. I'm always starting in a slightly higher time frame. For me, the higher time frame is not the 1 hour, it's not the daily, it's not the 4 hour. The higher time frame for me is the 15 minute. So what I can see here, what price has done, I'm always asking myself, where has price delivered from? Has price delivered from fair value gaps? And in this case, have a bit of a look. We've got a swing high up here where my cursor is. We've got a swing low down there. And one thing that I mentioned to the community is have a look at this. Swing high, swing low. If I mark out my Fibonacci like this, I put 0, I put 1, and I mark out between these two blue lines. That there is what's called optimal trade entry. Price, it's accumulated, it's manipulated up into where? This 15-minute fair value gap. And after doing so, it's reacted back down. Because of that, I don't immediately look for sells, right? Obviously, I'm favored towards sells because we're reacting from this top part of the range. However, I need to zoom in again to see what else I can target. Here's where I go to the 1 minute time frame, and here's where I mark out my next dealing range. So see that? That's the higher time frame range. Then what I do, I wait for market open. So market opens right here. We form two relative equal lows. So we call that smooth sell side. Once we do that, we push up higher. And here's the interesting part. We push up higher like this, and then have a look at this range here from this swing high to this swing low. Really interesting. So one thing I mentioned to my premium community is that yes, ideally I wanted to see price do this and then reverse. But because there was a macro coming up here, and we know that macros, if you're not sure, macros can run very quickly towards liquidity. So in this case, you can see that happen, 650 to 710. And so all these things are coming together. Price left equal lows. We manipulated higher at open. The opening range, the first half an hour. The macro was approaching. We tapped above the 0.5 level right here. We also swept liquidity right there. For me, the only thing left is to determine if I have a clear draw on liquidity. So a lot of people don't do this. A lot of people, yes, they use that 15-minute chart. Yes, they see prices reverse from here. Yes, they're looking for sells. Yes, they go back to the 1 minute chart. Yeah, they can see this, but they don't make sure that there's a clear draw on liquidity that they can target. Where are the liquidity points on my chart when price is sitting roughly up here? Where could I target? That's the question you got to ask yourself. That's the question that I ask myself before taking a trade, always. So to simplify it, you need an area where price can react from. You need to have a reaction from that area, and you need to have a clear target. Today we had all three. The area that we reacted from, keep it nice and simple. We'll do it again. The area we reacted from is from equilibrium. The reaction was that we had an inversion fair value gap. Let me draw this up, just like this. That's our inverse fair value gap here. And now we just need to make sure we've got a target. And ideally, we enter in a macro. However, I will enter before macros because macros run towards liquidity. They spool, they run quick. So sometimes the best entry, as you can see here, comes from before the macro. We accumulate and then price shoots down. But where are my targets? That's the important part. So what we'll do is this. We'll leave up the 0.5 level or the halfway point of the range. Some people call that equilibrium. Some people call that consequent encroachment. It doesn't matter. It's the halfway, it's the midway point of the range. And the market likes to move from discount back into premium and then back into discount. And that's exactly why the market's moved as it has. Where are my draws? Firstly, we've got these two relative equal lows, which we did sweep, these two here. We also had this low down here. We also had this low down here. And if we move further down, there's also draws down below. But notice how there's multiple stacked liquidity pools. There's a liquidity pool here, there's one there, and there's one there. It's not just one. It's not just one little sharp swing low. It's not just two, it's multiple. So when I combine all these things together, I'm anticipating that during this macro, we're going to draw towards these lows. I don't know for certain. I don't know that, but I'm anticipating that that's going to happen. So what I do, I execute my position like this. I go short, my stop goes above this order block. I take a partial roughly at about 10 handles. I think it was about here. And then I let the rest run. Executions right here. You can see exactly where I've executed from. 2 contracts. Took a partial here, just over 10 handles. And the other one got stopped into profit. And that's it. Yes, I could have held to this low. Yes, I could have trailed my stop a little bit different. But in these situations, guys, I'm looking for the low hanging fruit. And even if you do this, right? Even if you have a look at this. From where I took my TP, which was about here, we're still getting over 10 handles. And the second TP, which is right here, we're getting over 20 handles, where I've got base hit day after day after day. These are the types of days that you're looking for. And yes, it's a bigger day today, but this month for me, the focus is on building a bigger buffer, on trying to copy trade. And so I'm risking appropriately and I'm trailing appropriately. And that's how we got it. So that's a breakdown. And obviously you can see the macro here, the macro between these two vertical lines from 650 all the way until 710. You can see what the market does during that macro, right? Whether you take the whole move or whether you just take a one-to-one, you could have just taken a one-to-one here, taken a base hit, taken a short from here, even put your stop up here if you really wanted to. And you could have taken just a one-to-one and you're done. Or you could have held for a 1-to-2, right? So this trade in terms of risk to reward, the initial risk to reward, I think I took about it was about a 1-to-1 in the first partial. The second partial, however, the second trade, the second contract, that was over a 1-to-3. And so this is a big thing I want to promote here, and I want to kind of reinforce. Base hits are great, guys. Base hits pay the bills. But where possible, when you have a clear draw, when you're confident in what you're seeing, practice holding runners, because that is going to increase your upside dramatically, right? So for me today, I took 2 trades, technically, 2 contracts, 2 partials. The first was a 1-to-1 risk to reward, and the second was about a 1-to-3 risk to reward. That means on average, it's about a 1-to-2, which is perfect, right? And now you can see, obviously, we're in another macro here, which is 750 to 810, and we're going to see what the market wants to do. So again, guys, I appreciate all the support. If you are coming from my previous video, if you're new here, welcome to the channel. I do have a free Discord. The link to that will be in the description below. And if you want further posts, if you want to check out my Twitter, it's all here. This is all for free too, guys. Again, I appreciate all the support. Without you guys, there's no channel. And this education I'm promoting, I'm hoping that for someone, and let me know in the comments if I've helped you at all. I'm hoping that for someone, I can help you learn a strategy. And if you're not sure, leave me a comment. I'll answer to all the comments. All the comments I'll answer. The next video I got coming is about how to collect data, and I'm sure a lot of people want to see that. But until next time, guys, enjoy your week. Stick to rules, stay consistent, and you will see success. 2.5 years in the game for me. It took many, many months till I got my first payout. It could take years, but you got to stick at it. And with that being said, guys, I'll talk very soon. Peace out.